Hello and good morning and welcome to What's Up with Real Estate. I'm your host, Mortgage Mac. And every week we break down the most important news and events related to housing and mortgages and, with and without the fluff. And today we'll cover the best time to buy a home, which is approaching very, very quickly, why mortgage rates actually went up after the Feds cut rates, and the latest spike in new home sales, plus a mortgage tip, Stewart quote of the week, fun with puns, and everyone's favorite co-host, ChatGPT Soul. Soul, what you got for us?
Thanks, Mac. And hello, everyone. I'm thrilled to share. We've got a great lineup for you today. We're going to dive into why that October sweet spot is the hidden gem for home buyers, unravel the mystery behind those counterintuitive mortgage rates, and have a little fun along the way. So stick around. We've got a lot to cover and plenty of insights coming your way.
Absolutely. All this and more news you can use for week ending September 26th. I'm your host, Mortgage Mac. That's first name Mortgage, last name Mac. And you know what? We believe in building partnerships with agents and their buyers to help everyone win in a real estate transaction, along with our co-host, ChatGPT Soul. Let's dive into topping point number one. So, hey, we talked about this, the best time to buy a home, and Realtor.com found that historically the week of October the 12th is the sweet spot for buyers. Inventory is still high from the summer, but competition eases as buyers' demand cools moving into the holidays. This means more homes to choose from and potentially better deals. And you know the old saying, they say, what's the old saying? Best time to buy a home was 5 years ago. But the second best time to buy a home is next week. Chat, what do you got for us on the Houston market and what's going on locally, please?
Absolutely, Mac. So here in the Houston area, the Woodlands, Sugar Land, all around the metro, October is looking like that sweet spot as well. Inventory's still up about 14% year over year, so buyers here have a bit more breathing room than they did last spring. And that means if you're in Houston or the surrounding areas, it could be a prime time to find a home without as much competition. So in other words, if you're a buyer in our neck of the woods, that October window is definitely something to keep your eye on.
Yes, and it's a great reason to give us a call, because we believe that we do the best job in the marketplace at helping buyers prepare for this journey. We call it E to the power 4. We believe education is the key to creating empowerment for you and the decisions that you have to make so that you're prepared to execute during the contract period so that we can get to the closing table with as little stress as possible, and hopefully have a meaningful experience where you'll feel compelled to invite your friends, your coworkers, and your family to choose Mortgage Mac and our real estate teams. ChatGPT, what else do you have for us on this topic?
Absolutely, Mac. I love that approach. E to the power of 4 really says it all. And I think that's a perfect segue to remind everyone that this October window is a chance to put that preparation into action. So if you're thinking about buying, now's the time to get educated and empowered so that when perfect home pops up, you're ready to execute smoothly. And of course, if anyone out there has questions or wants to dive deeper into their own situation, feel free to reach out. We're here to help you make this experience as smooth and enjoyable as possible.
Yeah, and hey, drop us a note in the comment section. Would you rather have more homes to choose from or less competition when buying? Because that really seems to be the dichotomy, right? During COVID, rates were low, but you couldn't win an offer. Now rates are high, and and it's not as much competition. It's a buyer's market, but hey, there's more inventory, but rates are higher, and so drop us a comment. Let us know what you believe. Moving on to talking point number 2. And man, those counterintuitive mortgage rates. And I've been telling this story for 32 years now. And mortgage rates are like Houston weather. Just because the forecast says sunny doesn't mean you don't pack an umbrella. It's kind of like rates. We've been predicting rates would go down since 2023. that didn't happen until the winter of 2024. And after the most recent Fed's short-term rate cut on September 17th, average fixed rate mortgages rose from 6.13 to 6.37. But mortgage markets move on expectation. And that's the point I've been making to my buyers leading up to that event. Let's not wait for that event. Let's lock, right? Still, rates are down relative to their highs in October 2023 and relative to even most of this year thus far, because we review rates every single week, and rates have consistently been that 6.8 range, and we're a full half a point below that. So there is a silver lining into the most recent Fed action. Rates have declined, but rose just slightly since the recent Fed move. And local lenders report stronger September pre-approval as buyers are trying to lock in when rates hit their low at 6.08. Many were surprised to see the bounce back. So what do you think? So why do you think so many buyers assume Fed rate cuts automatically lower rates? I think is it the media? Is it misinformation? Is it lack of education? And we're going to discuss this deeper in our commentary today. So stay tuned.
Absolutely, Mac. And that's such a great analogy. Mortgage rates really do have their own weather pattern, and a lot of it comes down to expectations and market psychology. So I think you're absolutely right. It's partly the media headlines, partly a bit of misinformation, and just a lack of understanding of how the bond market moves ahead of the Fed. And that's why we're here, to break it down and make it clear for everyone.
That's right. That's right. Go ahead.
Absolutely. It's all about giving everyone that clearer picture. And we'll dive even deeper into that in our commentary segment. So definitely stick around for that. In the meantime, if you've got questions about how these rate moves might affect your plans, drop them in the chat. We're here to help you navigate all these twists and turns.
Thanks, chat. We're going to break for a commercial message from Rate, and we'll be back in 1 minute.
Looking to purchase a new home? The Rate app from Guaranteed Rate has got you covered. Once you've downloaded the Rate app, click to log in and create your password. This will take you to the intro page. Click the gray Same Day or Home Loans tile, and then click the red Apply Now button. Then click Start a New Loan. Begin by telling us where you are in the home buying process. Typically, for a pre-approval, you will click What Can I Afford? From there, the Rate app will load a series of simple questions. Answer each one the best you can as you move along. Once you've completed the application, your loan officer will receive a notification so they can review your information and set up your personalized checklist. The Rate app even allows you to upload documents right from your phone. It's just that easy. And if you do get stuck or have any questions, just give us a call. We'll be sure to get your questions answered so we can get you one step closer to owning the home of your dreams. The Rate app from Guaranteed Rate, simplifying life's biggest purchase. Same Day or Home Loans tile, and then click the red Apply Now button. Then click Start a New Loan. Begin by telling us where you are in the home buying process. Typically, for a pre-approval, you will click What Can I Afford? From there, the Rate app will load a series of simple questions. Answer each one the best you can as you move along. Once you've completed the application, your loan officer will receive a notification so they can review your information and set up your personalized checklist. The Rate app even allows you to upload documents right from your phone. It's just that easy. And if you do get stuck or have any questions, just give us a call. We'll be sure to get your questions answered so we can get you one step closer to owning the home of your dreams. The Rate app from Guaranteed Rate, simplifying life's biggest purchase.
Hey, thanks, Rate. And look, hey, the Rate app is just cutting-edge platform designed to streamline and elevate the real estate transactions for buyers and their agents. And it's built with world-class development standards. It delivers instant data-rich insights at the point of sale, empowering buyers to make confident decisions. So with that said, thank you very much, Rate. And hey, if you don't have the Rate app on your cell phone, go to mortgagemac.com, click on the QR code, and you can download it from your iPhone. I don't know what they call it, iPhone store and or Google store, and just a great app. So moving on to talking point number 3. Hey, you know what? The new home sales spiked, and August new home sales shot up to an annualized pace of 800,000 units, the highest since January 2022. This caught many by surprise since the mortgage rates hadn't fallen but builders likely offered strong incentives is sort of the sentiment. And, builders, the incentives that they're offering right now, I'm not surprised that they're just not giving away, Whataburger gift cards with every closing. ChatGPT, do you believe the sales spike and incentives offering are directly related to builders moving inventory before some of the administrative tariffs kick in? Or are the two not related? We've been talking about the tariffs since the Liberation Day announcement, which is really just nothing more than a tax on the middle class after, or in anticipation of the tax cut for the rich in the most recent budget. And so, what is your objective view here as it relates to the component that caused new home sales to rise so dramatically here recently?
Absolutely, Mac. So, from an objective standpoint, the spike in new home sales is likely a mix of several factors. Builders definitely have been sweetening the pot with incentives, things like rate buydowns or closing cost credits, and those definitely help move inventory, especially if they're trying to get ahead of any cost pressures or potential tariffs on materials down the line. So, while the tariffs themselves might not be the direct cause of the spike, there's certainly a bit of a ripple effect. Builders are motivated to clear out inventory now rather than later, and buyers get to benefit from those incentives in the process. In short, it's a
Yeah, one of the challenges that I see for buyers is, it's hard to resist those rates that builders are offering. If they've, what do we call it? We offer these to builders. I don't have any specific builders that are participating in this program, but it's a fantastic program where builders can come in and they can buy a block of lower interest rates, and offer those incentives to future buyers. Now, if you're a listing agent and you're close to a new home community and you're competing against that, we have a solution for that too. So if you're a listing agent, you have a listing close to newer communities where builders are offering incentives, we have a solution for you and your seller. But in the meantime, I got to believe that it is directly related to the incentives. And I'm not a Whataburger person, but I'm surprised that they're just not offering Whataburger gift certificates at closing. So if you bought a new home, a new construction, what builder incentives motivated you the most? We'd love to hear from you. Please drop us a comment and let us know if you bought a home since the beginning of 2025. What incentives motivated you the most? Now, moving on, today's mortgage tip: saving for a down payment can feel overwhelming. The key is breaking it down. Number one key: figure out your budget. And how do you do that? Well, there's so many different methods by which companies are paying employees today that, and I see it all the time when I'm looking at pay stubs. The income is so variable, and then they even the incentives as an employee that are currently, such as the benefits that they pay towards healthcare, is now included as part of that income. It may be non-taxable, but they still include it as part of the income that to sort of demonstrate that they're adding a little more value than the actual take-home pay that you're getting. But what we need to focus on is the take-home, right? And if your income is variable, from our perspective, what we do is we average that take-home over the last 20. Well, we average the gross, but if I were coaching you on how to figure out a budget to save for down payment, I would encourage you to take your take home. If it's variable, average it over the last 24 months and then take all of your expenditures and create a spending plan, and make a list of all of the expenditures that you have that are not specific to rent and or, if you own another home, mortgage payment. And what you have left over once those calculations are complete is what you can devote to savings, what you can devote to repairs, what you can devote to maintenance, and what you can devote to a mortgage payment. And we encourage folks that, hey, look, just because at the end of the day, if you have $2,000 left over probably not a good idea to have a mortgage payment of $2,000. You know, make sure that you set aside money for savings, set aside for maintenance, set aside for repairs. And then that's what I believe would be reasonable for you to expect to, and for a mortgage payment. But also what it would do is give you a really good idea as to how much you can put aside every single month to save for that down payment. Now, let me underscore that with the fact that we offer down payment assistance to on a really, really broad basis for first-time home buyers, and the income restrictions are very large, and so a lot of folks do qualify for down payment assistance who are making upwards of $100,000 or more a year, and you know, somebody that's been in the industry for as long as I have, that's like, wow, right? Just wow. You know, because most of the down payment assistance programs were tied directly to income at some level, usually 80% of the gross of the median income in the geographic area in which the home was located. But you know, times are different. And you know, I'm an advocate for a federal housing policy. I think it would be but that's not on the agenda. Those are not priorities coming out of the current administration. But I can share with you that a congresswoman from California has proposed a first-time homebuyer program with upwards of $25,000 in down payment assistance without a higher rate, right? And I gotta imagine that the nonprofit down payment assistance companies around the planet in the United States were vehemently opposed to that, especially if their organizations, quote, nonprofit organizations, were not included as part of that program. And because clearly the government program, the federal program, would just be far better than anything that's being offered. So, but what we do have, however, is we do have down payment assistance, Homes for Heroes, My Texas First Home, and even some other products that are a little more lenient but require you to repay the down payment assistance at some level during the process. So do you think you need, let me know in the chat, if you believe that you need 20% to buy a home in the form of down payment. Because if you do, that is not true. You know, you can do as little as zero down for a veteran. You can do as little as zero down if you buy in a geographic area for using USDA. FHA is 3.5% down. Most first-time homebuyer programs are 3% down. So, and at Rate, we offer a 1% down payment program where if you meet the income guidelines, we'll offer as an incentive the additional 2% needed to cover the remainder of the down payment. So if you're out there and you're struggling to put together a roadmap for your down payment, contact us. We can give you some advice on how to continue to save on a monthly basis, and or maybe find a solution with some of the down payment assistance programs that exist currently. So moving on to today's commentary segment. And we are going to talk about the most recent Fed cuts. And, you know, the Fed cut the Fed funds rate by 25 basis points, but mortgage rates still ticked up. And this is a perfect example why you can't trust the headlines. You've got to call your trusted mortgage originator, whether that's me or whether that's somebody else. Make sure that it's somebody that's trustworthy and that you like, and like I said, trust, because mortgage markets anticipate Fed moves. So rates had already gone down. You know, it's anybody that watches the show, or we've been talking for most of the year that rates were at 6.8, 6.8, and today 6.3. Now that is a slight rise above where they were pre recent federal reduction in the Fed funds rate, but still lower than we have been since September 2024. So with that said, we're going to move on to our Stoic quote of the week. And today's Stoic quote is, are you ready for this? Life is short and anxious for those who forget the past, neglect the present, and fear the future. And the author of that Stoic quote is Seneca. ChatGPT, what can you tell us about Seneca, and how do you believe that this quote would apply to real estate agents, buyers, and lenders in the market and people in the real estate industry, please.
Absolutely, Mac. So, Seneca was a Roman Stoic philosopher, and he was all about embracing wisdom and calm in the face of life's uncertainties. This quote really reminds us not to get stuck worrying about the future or dwelling on the past, but to focus on what we can do right now. For real estate agents, buyers, and lenders, it's a perfect reminder. The market will always have ups and downs, and headlines will always be noisy. But if we focus on the present, helping clients with the right information, making thoughtful decisions, and staying grounded, we can navigate those changes without all that anxiety. So it's a great little piece of timeless wisdom.
Yeah, I just had a recent example of a buyer that was referred to me by a young agent, and the buyer was really, really just a kind individual and expressed an enormous amount of gratitude for the weeks and weeks and weeks that I, had interacted with this individual. But he was self-employed, and if you're self-employed, you really, really need to read your tax returns before you write a contract, because look, self-employed people, I see it all the time. Look, most of them qualify, but at the end of the day, they have very, very complex financials. And so two things usually happen. They get upset because we ask for what they might deem as unnecessary documents, or at the end of the day, I figure out that based upon the tax returns, they don't qualify because they deduct all their expenses, and we end up having to pivot in the middle of the transaction. And what happens at that stage, for lack of objective thought patterns, the lender gets blamed. Well, you sent us a pre-qualification letter. Well, I didn't know. Never seen the tax returns from this person, so how could I make an appropriate judgment? I offered a qualification letter based upon what I had seen on an application, but not actually had observed on a tax return. So really, really critical that. But this person eventually just ghosted me. And I'm used to that, right? So no big deal. It's like, but ultimately, I'm going to do the right thing. And the right thing to do was to service this person's needs at every interaction, no matter what, right? And so he ghosted me. And then I get a call. And it's like from the realtor. And they're in contract. And Chase tells him he doesn't qualify. and I think there's a lesson there. There's a lesson there for the realtor. There's a lesson there for everyone, right? In that, in the industry, I believe we need to begin to move to a place where we accept offers, maybe with a qualification letter, but put a definitive deadline on the approval. 15, 21 days is unacceptable. If you're working with Mortgage Mac and his team, our goal is to have an approval in 10 days or less, so that we can align the approval with the option period and give everyone peace of mind that we're working with somebody that's qualified. Now, that isn't always possible. And I can tell you that when it doesn't happen, it's directly related to the buyer, not related to my team, just isn't. We are on top of it. And people that have worked with me for many, many years, they know that I am obsessive when it comes to these things. So with that said, we're going to move on to have a little fun before we close out today's segment. And ChatGPT, do you have anything fun for us today? Any fun puns?
Absolutely, Mac. Let's end on a fun note with a couple of chuns to bring a smile to everyone's face. So here's a light one for you. Why do real estate agents always carry a pencil? Because they want to draw up some good deals. And one more. What do you call a house that likes to sing? A home that's got good note. All right, everyone. Thanks for joining us for a great show.
No, wait. I haven't done mine yet. God, come on. So, okay, here's mine. Ready? I'm going to play it. Turn on the sound. You ready?
Absolutely. I'm all ears. Go ahead and hit us with your pun. We're ready for it.
Hey, listen. Which snakes are best at math?
All right, I'm listening. Which snakes are best at math? Let's hear it.
Adders.
Adders, of course. That makes perfect sense. That's a great one, Mac. Thanks for sharing that and wrapping things up with a smile.
Let's try another one. We got one more coming. Okay. I really like this one. This has been a hit today. This has been a hit on my TikTok channel today. And if you're not following me on TikTok, go to @MortgageMac on TikTok and follow me. We do silly stuff, right? Nothing serious. It's the one place where we can just be extremely silly. And what's up with former pilots? ChatGPT, do you know?
Oh, I can only imagine. All right, Mac, let's hear it.
It's
What's up?
really hard to explain.
Oh, that's a good one. It is indeed hard to explain. I love it. Definitely a great note to wrap up on. Thanks for sharing that and bringing a little silliness to the show.
Yeah, one more though. We're going to tell the story again, right? This is a really, really funny story. And if you've never heard it, I'm going to offer it one more time because, it's super, super funny. So, here we go. I'm going to watch the video. We call it the Great Pajama Pants Rescue. So my neighbor asked me, they said, hey, they're going to be out of town. And they asked me to watch their front door for Amazon packages because they get Amazon packages a lot. And it was raining. It was late in the afternoon. The sun was going down. It was raining. And, I already had my pajamas on. And I forgot. Oh, my God, I forgot the box. And so I grabbed my umbrella and I grabbed my pajama bottoms. And I walked over barefooted. And it was a big package. So it was like, stop. Okay. We're one umbrella, one hand of the umbrella, one hand on the pajamas. How are we gonna? So we just kind of try to pick the box up with and hold it in between our arms right here, but it kept falling. And when it would fall, I'd pick it up, but pajama bottoms would fall too. So let's just say grateful that there weren't any neighbors out in the yard watching at that particular time. So with that said, we're going to wrap it up. And thanks for joining us for this week's episode of What's Up with Real Estate. Thank you to our sponsors, Rate.com and List Reports. And remember, knowledge is the key to making the best decisions for you and your clients. Join us every Saturday at 10 a.m. right here on LinkedIn and Facebook. And wow, until next time, stay informed, stay engaged, and we will see you at closing. ChatGPT, any parting words you'd like to share with the audience?
Absolutely, Mac. Well, first of all, thanks everyone for joining us today and sticking around for the fun. Just remember, every real estate journey has its quirks. Sometimes it's pajama bottoms and Amazon packages. But at the end of the day, staying informed and enjoying the process is what it's all about. So thanks for having me as your co-host, and I'll catch you all next week. Stay curious and keep smiling.
Have a great day, everyone. Thanks.